Imagine it's tax time. You're sitting at the kitchen table, and you've just read that from 2026 you can claim $1,000 off your tax with no receipts. It sounds like free money, so you go to add it on top of your usual work-from-home costs. Stop right there, because adding that $1,000 on top of your running costs has a name at the ATO. It's called double dipping, and it's one of the quickest ways to get your return flagged and have hundreds of dollars clawed straight back. From the 2026-27 income year, about 6.2 million workers, roughly 42% of taxpayers, so more than 1 in 3 of us, can claim an automatic $1,000 work-related deduction with no receipts. Federal Budget 2025. If you've never had to think this carefully about deductions before, that's not a failure on your part. The rules genuinely changed, and nobody sat you down to explain them. Here's the catch nobody's saying loudly enough. You can't take that $1,000 and then itemize the same expenses again. So today we'll make 3 simple moves. Pick one method, run the maths, and keep records that survive a review. Let me show you how. Here's the one number to burn into your memory, $1,000. That's the new instant work-related deduction from 2026 to 27. Offsetting your employment income, no receipts needed, Federal Budget 2025. The average saving works out to about $205 in your pocket, Federal Budget 2025. But here's the part most people miss. It's not a bonus you bolt on top of everything you already claim. It replaces itemizing, treat it as extra, and you've just overclaimed. And that single misunderstanding is where the trouble starts. So here's your plan for today. 3 simple moves. 1. Pick a single work-from-home method and stop any accidental double dipping. 2. Run the maths on the $1,000 versus itemizing your real costs. And 3. Keep records that would survive an audit. Each one takes under 20 minutes, and they're all free. So how does this double dipping actually happen to ordinary people? The ATO's fixed rate method lets you claim 70 cents for every hour you work from home in 2024, 25, and 2025-26 ATO fixed rate method. But here's the thing most people don't realize, that 70 cents already bundles in your running costs: electricity, gas, phone, internet, even stationery like printer, ink, and paper, ATO fixed rate method. So when you claim the 70-cent rate and then claim those same bills again as actual costs, you've accidentally counted them twice. The ATO calls that double dipping, and it's an honest mistake that's incredibly easy to make. Let me show you what that looks like in real dollars. And I'll run it 3 ways so you can find yourself in it. Say you work 800 hours from home. The fixed rate gives you 800 times 70 cents, $560, ATO fixed rate method. If you're a lighter user around 500 hours, that's about $350. A heavier user on 1,200 hours gets $840. Now, take that middle case and then also claim $600 of electricity, internet, and phone on top. You've claimed $1,160, but $600 of it is double counted. At a marginal rate of 34.5%, that's around $207 of underpaid tax in 1 year, and the ATO can go back and amend your assessment for at least 2 years. Authors estimate ATO rates. Now here's the part that catches people on the other side, and I want to be honest with you because this complicates the simple answer. The record rules have tightened. The ATO no longer accepts a 4-week sample diary. You now need an ongoing, exact record of every hour you work from home across the whole year, plus 1 bill per running cost category and receipts for assets over $300, ATO fixed rate method. So when the easy $1,000 arrives, plenty of people with messy records will just take the flat amount to avoid the hassle and quietly hand back legitimate deductions they were genuinely entitled to. So this isn't just about overclaiming. Sometimes the trap is the opposite. There are 2 ways to get this wrong, and both cost you real money. If you overclaim, taking the $1,000 and itemizing your work-from-home costs as well, you're overclaiming by hundreds and exposing yourself to back tax and interest tax serve 2026. But if you underclaim, taking the easy $1,000 when your real deductions are higher, you lose out silently. Picture someone with $1,470 of genuine expenses taking the flat $1,000. That's $470 left on the table, about $162 of extra tax every single year. Authors estimate ATO rates. And here's where it gets genuinely interesting. Most people never check which side of that line they're on. Here's the myth that catches almost everyone. And if you believed it, you're in good company. People hear they can get $1,000 with no receipts and naturally assume it stacks on top of their work-from-home claim. It doesn't. It's either or. You take the standard $1,000 deduction or you itemize your work expenses. Never both. Yahoo Finance 2025. Claim both, and that's double dipping. The fix is simple. Compare the two totals and claim whichever one is bigger. Let me put the whole picture together for you. If you stack the $1,000 on top of your itemized costs, the ATO could disallow over $1,200 after about $424 of extra tax in a single year, authors estimate, ATO rates. Or, if you play it lazy and take the flat $1,000 when your real costs are higher, you quietly bleed roughly $3,200 over 20 years, authors estimate. Combined, getting this call wrong can cost you $6,000 to $7,000 across your career. Now let me show you exactly how this plays out for one real person. Meet Kate. She's 38, a marketing manager who works from home 3 days a week. She earns $110,000, so her marginal rate including the Medicare levy is about 34.5%. She's an employee, no business, her laptop's from work, but she bought her own chair and monitor, and she clocks around 900 hours of work from home a year. She's not careless, she's just busy. Here's what Kate found when she actually looked. Discovery 1. $173 a year. That's what Kate's been quietly underpaying without realizing it. She's been claiming the 70-cent fixed rate and also claiming $500 of electricity, internet and phone as actual costs, ATO fixed rate method. But those bills are already baked into the fixed rate. On 900 hours, her deduction should be $630, full stop. That extra $500 is double counted, and over 3 years it's roughly $1,500 of deductions she may have to reverse, authors estimate, and she had no idea. Discovery 2. In 21, 26, and 27, Kate hears she can get $1,000 with no receipts, and she assumes she can add it on top of everything else. So she plans to claim the $1,000 plus $630 of fixed-rate hours, plus $600 in subscriptions and training, $2,230 all up. But you simply can't claim the $1,000 and itemize the same categories again. Yahoo Finance 2025. If the ATO recalculates down to just the $1,000, that's about $424 of extra tax plus interest, authors estimate ATO rates. But here's the twist that surprised even Kate. Discovery 3 on Naorainam. And this is the one nobody expects. With proper records, Kate is actually better off not taking the easy shortcut. Her real expenses add up. $630 of fixed-rate hours, $400 in subscriptions, $200 in training, plus a depreciated chair and monitor worth about $120 each per year. $1,470 in total, ATO fixed-rate method. If she takes the lazy $1,000 instead, she forfeits $470, around $162 of tax, every single year. Authors estimate ATO rates. The shortcut isn't always the win it looks like. Now add it all up across Kate's whole career. The clawback and interest from years of double dipping comes to around $850, then 20 years of taking the easy $1,000 instead of itemizing what she's really owed. Roughly $3,200, factor in pay rises and more equipment over time, and her realistic lifetime cost pushes into the $6,000 to $7,000 range, authors estimate. That's a lot of money to lose to a misunderstanding. And the good news is it's completely avoidable. So could this be you? Here are 3 quick signs. 1. You claim the 70-cent rate and separately claim electricity, internet, or phone. 2. You think the new $1,000 is a bonus you add on top of your work-from-home claim. And 3. You don't keep an exact year-round log of your hours. If any one of those rings true, don't worry. The next 3 moves are exactly what you need, and they're all simple. So where does all of this leave you? You don't need to overhaul your whole financial life. You just need a few specific practical steps you can start today. 3 moves, and let's do them together. Pick one method, run the maths, and lock in records that would survive any audit. Move 1, pick one work-from-home method and stop any double dipping. Head to the ATO's fixed rate method page and read exactly what the 70 cents already covers. Electricity, gas, phone, internet, and stationery ATO fixed rate method. Then look at your last return and strip out any of those bills you've also claimed separately. Just a quick note, this is general information, not personal tax advice. 3 simple steps. First, read the 70-cent inclusions list on the ATO page so you know exactly what's covered. Second, cross-check your last and draft returns for any bills you've counted twice. And third, remove the duplicates. Keep either the fixed rate or actual costs, never both. Done right, you'll have one clean work-from-home calculation with zero double-counted running costs. Move 2. Run the maths on the $1,000 versus itemizing. Total up your real deductions, your fixed rate hours, professional subscriptions, training, and the decline in value of any assets over $300 ATO fixed rate method. If that total beats $1,000, itemize it. If it doesn't, take the flat $1,000. The one thing you never do is claim both. And this 5-minute check is what tells you which path is bigger for you. 3 steps and you've got it. First, add your work from home hours times 70 cents to your other work expenses. Second, add depreciation on any assets over $300. And third, compare your total against the flat $1,000 and claim the higher number. Done right, you walk away claiming the larger of the two, never stacking them on top of each other. Move 3. Keep records that would survive an audit. The ATO no longer accepts a 4-week sample diary. You need an ongoing log of every hour you work from home across the whole year, one bill for each running cost category, and receipts for any asset over $300 with its decline in value worked out. ATO fixed rate method. Get this right and going over $1,000 is no problem at all. You'll have the proof to back every dollar. 3 steps to lock it in. First, log every work from home hour across the entire year, not a 4-week sample. Second, keep one bill per category: power, phone, internet, stationery. And third, file receipts for any asset over $300 along with its depreciation calculation. Done right, you'll have a year-round log plus one bill per category, ready to show the ATO the moment they ask. So why does this matter right now? Back in 2023, the ATO scrapped the 4-week sample diary. You now need full year AR records. ATO fixed rate method. In 2024, it locked in the 70-cent fixed rate, which applies for both 2024-25 and 2025-26 ATO fixed rate method. And from the 1st of July 2026, the new $1,000 instant deduction goes live. No receipts, but you cannot stack it with itemizing. Federal Budget 2025. The trap arrives next financial year, so the time to sort your method and records is before you lodge, not after. Once you've acted, run a quick 3-point check. You should see one work-from-home method in your return, not 2 overlapping claims. Confirm your claim total equals either your itemized maths or the flat $1,000, never both added together. And if you went above $1,000, make sure you've got the logs and bills to back every dollar. If anything feels uncertain, a registered tax agent can confirm it in minutes. Everything I've shown you today comes from the ATO, the Federal Budget Fact Sheet, and Tax Professional Guidance, all linked below so you can check it yourself before you lodge. If you've made it this far, you now know something most work-from-home Australians don't: how the new $1,000 deduction can trigger an audit and how to claim it the safe way. Your next step is simple. Open your last return tonight and check for any double-counted bills. And if you want to go deeper, next we dig into the depreciation deductions most work-from-home workers never even claim. If this saved you from a costly mistake at tax time, take 2 minutes today to check your own return. I'm Sophie. I'll see you in the next one.